So for this lecture, we are going to look at the homework for Chapter 4 so I can walk you through how you're going to complete this homework. Now the first question, exercise here, provides you with information regarding creating a bank reconciliation. Oscar's Red Carpet Store maintains a checking account with Academy Bank. Oscar's sells carpet each day but makes bank deposits only once per week. The following provides information from the company's cash ledger for the month ending February 28, 2018. So it gives us a list of deposits and a list of checks, and then it provides us with the balance. The first of the month, our receipts minus our disbursements gives us the balance as of February 28th. It provides us with a bunch of information, and we are required to create the bank reconciliation. So one thing we do know is that the following is information from the company's cash ledger. It shows us the balance on February 28th is $8,100. So per the general ledger, we're going to place the balance of $8,100 in here. It tells us in A, the ending cash balance recorded in the bank statement is $13,145. So we're going to put that in the bank statement balance. Then it tells us that cash receipts of $1,600 from February 26th through the 28th are outstanding. So these are deposits outstanding. So we will add those to the bank side of the reconciliation. Checks number 325 and number 327 are outstanding. So if we look at 325 and 327, that is the $200 and the $1,900 are outstanding. So that's going to be minus $2,100. That is outstanding. Checks outstanding. The next step says the deposit on February 11th includes a customer's check for $200 that did not clear the bank. So what that tells me is we have an NSF. So we're going to put in an NSF check of minus $200 because we have to show that NSF, that money did not get deposited as we hoped. Therefore, we have to reduce our company balance for that money. Check 323 was written for $2,800 for advertising in February. The bank properly recorded the check for this amount. Check 323, if we go and look at 323, we see we recorded it for $2,500. So we made a mistake. It was, I would call it a company error. Company error of $300. It's a company error not in our favor. Minus $300. From there, it tells us an automatic withdrawal for Oscar's February rent was made on February 4th for $1,100. So an automatic withdrawal, EFT for rent, minus $1,100. Then it says Oscar's checking account earns interest based on the average daily balance. The amount of interest earned in February is $20. So interest earned, $20. Interest on account, 20. Then we also see that one of Oscar's suppliers, Titanic Fabrics, borrowed $6,000 from Oscar. I don't think I want this as interest on account. I want this interest received or interest earned. Let me see. Interest on note. I guess interest on account is all we have here. Okay. One of Oscar's suppliers, Titanic Fabrics, borrowed $6,000 from Oscar. On February 24th, Titanic paid $6,250. $6,000 borrowed amount plus $250 interest directly to Academy Bank in payment for January's borrowing. So the note received is $6,000. I'm going to have to put this company error down here because I'm not going to have space for it. So I'm going to then also show the interest we received on this note of $250. Then it tells us Academy Bank charged service fees of $125 to Oscars for the month. So this is going to be a service fee, and it's going to be minus $125. So if we go through our bank cash statement, let me get a means to add up these figures here. So we've got oh, come on. Okay, let me try to show the different numbers here, the 13, 145, the 1600, and the minus 2100 gives us a total of $12,645. We should be able to do the same over here. We've got the 8100, the 6000, the 270, minus the 200 is 70. We've got 1100, 1400 minus 1525. We should have a total here of 12,645. So that is our bank reconciliation. Now the next thing it's going to ask us to do, you can check your work by confirming that our numbers match up. Then the next thing we'll do is create the journal entries. The first one is record the amounts that increase cash. Well, our note, our interest on account, and our interest on the note increase cash. So our cash is being increased. Our note receivable is being increased by $6,000. Our interest earned, interest revenue of $270 would mean we have cash $6,270 as interest recording note and interest on bank reconciliation. I guess we didn't have to show an explanation there. The next one that we'll want to look at is, let's see if I can check my work from that previous one. Oh, 6270, 6270, okay. So the next one is showing the amounts that decrease cash. We've got the NSF check. Now that NSF check means that when we deposited it, we debited cash, we credited an accounts receivable. So we're going to have to reverse that entry. Our EFT for rent is a rent expense. The company error was for advertising and then service fees. So the first one we'll do is the accounts receivable. For $200. Then, let me just make sure it was $200. Then we have $1,100 for rent expense of $1,100. Then we had an error in advertising for $300. Advertising expense for $300. We had a service fee expense for $125. And we should be able to do a credit for cash for $1,725. So there you have it. This, you can check your work, completes the first problem for the homework. You can then go up and score it and move on to another problem. This bank reconciliation is a little more challenging than the first one. So you've got information regarding the sales and the legal fees. You see the cash balance on May 31st is the $5,100. Then we have Midwest Bank showing various information. And then we have some more information telling us the difference in the beginning balance in the company's records, and the bank statement relates to checks 469 and 470, which were outstanding as of April 30th, 2018, in the prior month. Well, for purposes of us reconciling the May statement, we really don't need that in why those have gone through the bank account here, and we don't see them up in our general ledger. And then it tells us the bank made the EFT on May 20th in error. The bank accidentally charged Diaz for a payment that should have been made on another account. So they're letting us know that this was a bank error. It's nothing we need to adjust with the company. This is something we need to adjust with the bank. So the first thing we'll do is find out the bank balance per the company is $5,100 on May 31st. So I'm going to put that in right away. We also know that the bank balance is $52.10 per the bank records. Midwest, May 31st, $62.10. So I'll put that information in. Now I like to follow steps. I like to first do any deposits outstanding. It's telling us that if we look, we see May 3rd deposit of $14.60. We see a deposit here on May 4th of $14.60. We see May 10th deposit of $18.90. I see a May 11th deposit of $18.90. I see a May 17th deposit here of $25.20. I see that May 18th here of 2520. I see May 24th, deposit of 2990. May 25th, 2990. Don't see any other deposits there. So this is an outstanding deposit May 31st for 3118. So deposits outstanding 31, did I say 80 or 18? $31.80 is an outstanding deposit. Let's now take a look at any potential outstanding checks. So if we look on check 471, legal fees, I believe that's the $1,300 right here. 472, property taxes, $1,670. Salaries, $473, $3,600. Advertising, $474 for $1,500. Supplies, $475. Don't see it down here through the bank. So that has not yet cleared the bank. 476 has also not yet cleared the bank. So these two checks have not cleared the bank. So checks outstanding would be the $3,600 and the $550, which is $41.50 minus the $41.50. Checks outstanding, $41.50. Okay, we also know that the bank made an error on May 20th. Let's see what that is. May 20th, they showed an electronic funds transfer of $600. They're saying that was an error. They agree to it. So I'm going to add back $600 because they subtracted $600 from the bank. Bank error, $600. So right now, based on this information, I have the 6210, the 3180, the minus 4150, and the $600 would give me a balance of $58.40. Okay, now let's go over and see what we need to do over on this side. So, if we look here, I see a couple things. I see a note of $1,100. I see interest of $60 and interest of $30. So those are items that have hit the bank that we do not show on our general ledger. So note collected, $1,100. Then we have interest earned of $60 plus $30. 60 here, 30 here, so that's $90. I also see an NSF here of $400. So that's $400 NSF we need to record. NSF minus 400. Then looks like we have a service fee here of $50. So we'll go back here, oops, and take $5,100, $6,200, $6,290, and minus $450 should be a total of $58.40. So as we see here, our bank balance per reconciliation of the bank's cash balance is the company's balance per reconciliation. So now the next step is to record journal entries. Again, we can check your work to see that everything has been, that is correct. Then the next thing we'll do is record the journal entries. So we're going to record amounts that increase cash. The note and the interest are the two items that increase cash. So we'll debit cash, and we're going to credit a note receivable of $1,100. We will also credit interest earned, or interest revenue, of $90. Our cash will be $1,190. So we can check our work to make sure, in fact, we did it right there. Okay. The next one asks us to record the amounts that decrease cash. Well, we've got a couple items here. We're not going to worry anything to do with the bank's balance. Only worrying about NSF check and service fees. So the NSF check basically means what we thought we received in accounts receivable. When we did that, we debited cash, credited accounts receivable, is not true. So now we have to go back and reverse it, which means a debit to accounts receivable for $400. And then our service fee was a service fee expense of $50. And we would then have a credit to cash for the $450. Now you can also check your work to make sure we are, whoa, what did I do wrong? Cash, notes receivable, interest revenue. Accounts payable, $400. Okay, why is that an accounts payable of $400? NSF, what was the NSF? That should be an accounts receivable of $400. The NSF should be, oh, I screwed up and put accounts payable, not accounts receivable. Oh, Lord. Put the wrong thing. This should be cash. So I wasn't paying attention. I'm just trying to get by with it and move on to the next. And here I had it typed in something goofy. Sorry about that. So that's what I meant to say, and then I typed in something else. So there you see how you complete the next problem. Now the last one I'm going to show you is to go through a statement of cash flows. So the key with the statement of cash flows is really taking and looking at each one of these collections and payments and discussing, is it operating, is it investing, or is it financing? We know operating has to do with the normal purpose of the business. Investing has to do with buying or selling assets, long-term assets, and financing has to do with loans, borrowing, paying back, anything to do with investors, the stockholders, and paying dividends. So if we just look at this, cash collections from customers. Customers is in the normal course of a business. The 93.5 would be cash inflows from customers. The sale of an unused warehouse, that's an asset, a long-term asset. So selling an asset would be cash inflows from investing. Bank borrowing would be a financing activity. So we would put this as an inflow. Now our payments, employee salaries, office rent, office utilities, and materials to make toys all have to deal with the operating activities of a business. The manufacturing equipment is a long-term asset. So that would be investing. And then dividends to stockholders relates to financing activities. Remember, we do not deal with any non-cash transactions. We are only focusing on cash transactions. So as you see here, cash inflows, the first one is customers. From customers would be $93,500. Cash outflows for employees' salaries, that would be minus $65,300. Then we have for rent. Office rent is minus $19,000. Then we have for utilities. Maybe it says office utilities. Office utilities, that is going to be minus $11,800. For materials to make toys is going to be a minus $27,700. Remember, if it's a cash outflow, you need to have it in parentheses. The next is cash flows from investing activities. Well, the sale of the unused warehouse is definitely cash inflows, and the manufacturing equipment is definitely a cash outflow. So investing, warehouse of, I believe it's at $36,000. And then manufacturing equipment minus $46,000. Now the cash flows from financing, the money bank borrowing of $26,000 from bank loan, bank borrowing $26,000, and then the dividends, dividends to stockholders $6,700 minus $6,700. So the cash inflows and the cash outflows have a net decrease in cash, $30,300, $40,300 minus $19,300, $40,300 and minus $19,300 gives us a $21,000 outflow. And the reason I'm saying that, this is a minus, this is a minus, this is a positive. So we've got a minus $21,000 decrease in cash. It should tell us what it started at the beginning of the period. The cash balance at the beginning was $25,500. So $25,500 was the cash at the beginning of the period. Therefore, the cash at the end of the month should show as $4,500. So let's just see, make sure I didn't make any mistakes. And there we have it. Cash at the end of the month, $4,500. So those are three of the problems. You've got a couple more problems here. You've got one that we will have already gone over regarding Balboa's Gym, where we record some transactions and we create a T account, which then from there we can create our statement of cash flows. Then we have, I guess that's it. That's the only other one. So I think this homework will flow much smoother for you